All right, so today we're going to do a deep dive into the world of Warren Buffett and Berkshire Hathaway
Yeah.
with a focus on their 2021 performance. And you've
Wow.
brought some really cool stuff,
Yes.
including Buffett's letter to shareholders.
Always a good read.
Always a good read. And then also some discussion points based on the letter.
Yeah. I think
So it seems like we're trying to
we'll get a good roadmap, I think, to
yeah, get a really solid grasp on his investing style and really understand what makes Berkshire Hathaway tick,
that's right.
and maybe even pick up some wisdom for ourselves
So
for
some-
navigating
how to apply it to
today's crazy economic waters.
today's world. Yeah, absolutely.
Yeah,
I think we've got Buffett's own words to guide us,
right.
and that's always a treat.
Yeah.
What jumps out at you from the letter?
Honestly, the thing that surprised me the most was the part about Berkshire's massive infrastructure holdings.
Oh, interesting.
I always think of them as this stock picking powerhouse,
Right.
but to learn that they actually own more U.S. based infrastructure
Right.
than any other American company,
Wow.
um,
Yeah.
that was a real eye opener.
It's a huge part of their business.
$158 billion worth,
Yeah, it's significant.
to be exact.
Yeah, and
Wow.
it's a side of Berkshire that often gets overshadowed
Right.
by their stock portfolio.
Right.
But, when you think about their overall strategy,
Yeah.
it's absolutely essential to understanding how they do what they do.
Right.
And what's interesting is that Buffett doesn't present this as some grand master plan.
Oh, yeah?
It's more like a natural consequence of their consistent, long-term investment approach.
So they weren't like setting out to become an infrastructure giant.
Right.
It just sort of happened.
It just kind of happened organically as they saw
Yeah.
value in these assets, and often in sectors that other people were overlooking. And they were patient enough to let those investments mature.
Yeah, I think it speaks volumes about his confidence in the underlying strength of the American economy.
Absolutely. I think that's a great point.
He's
He's putting his money where his mouth is
right.
in a big way.
It definitely challenges the image of Berkshire as just a financial player.
Oh,
They're literally shaping the physical landscape of the country.
they are. They're builders.
Yeah.
Yeah.
Speaking of things that challenge perceptions, let's talk about taxes.
Okay.
I found that section of the letter pretty fascinating.
Yeah.
Especially the contrast between Berkshire's early days
Okay.
and their current tax contributions.
Right.
Yeah,
Yeah, it's a dramatic shift, isn't it?
it is.
In their early years, when they were struggling in the textile industry, they were paying something like $100 a day
Wow.
in income tax.
It's hard to believe considering that in 2021 they paid over $3.3 billion
Right.
in federal income tax alone.
That's about $9 million a day
$9 million every single day.
every day.
Wow.
Yeah, and Buffett goes beyond just stating the numbers.
Right.
He frames it as a silent partnership between Berkshire and the U.S. government,
Okay.
emphasizing how their success wouldn't have been possible without the stability and the opportunities
Right.
provided by the American system.
He seems genuinely grateful for that partnership, which
Yeah.
is kind of refreshing to hear from someone at his level.
Yeah, it's
do.
it's a good perspective.
Yeah. So let's shift gears a bit
Okay.
and talk about float,
Right.
a concept that's central to Berkshire's insurance operations.
Yeah.
And frankly, a bit mind-boggling in its scale.
Okay.
By 2021, they had accumulated a staggering $147 billion in float.
Wow.
Help me wrap my head around what that means, in practical terms.
Yeah, so float is essentially the money that insurance companies hold from premiums,
Okay.
but haven't yet paid out in claims.
Yeah.
So think of it as a massive pool of capital that Berkshire can invest
Right.
while they wait for those claims to come due,
Right.
sometimes years or even decades down the line.
So it's like having access to this huge interest-free loan
That's a great way to think about it.
that they can use to generate returns.
Yeah.
No wonder Buffett calls it free money.
Yeah, he loves it.
But it takes a certain kind of investor to make the most of that, right?
Yeah.
Someone with a very long-term outlook.
Absolutely. It's not about chasing quick profits.
Right.
It's about compounding returns over time.
Right.
And that requires a level of patience and discipline
Yeah.
that few investors possess.
It also requires a knack for picking the right investments,
Yes.
which is where Buffett's legendary skill comes in.
Absolutely.
Which brings us to Berkshire's Big Four,
Okay.
those powerhouse companies that drive a significant chunk of their portfolio.
Yeah.
I was struck by the fact that their insurance operations, that massive float generating machine, are considered one of the big four alongside giants like Apple and BNSF.
It's true.
Yeah.
It really underscores how crucial the insurance business is
Right.
to Berkshire's overall strategy.
Right.
I mean, it's not just a source of steady income.
All right.
It's the engine that fuels their long-term investment approach.
Wow.
It provides them with the capital they need
Right.
to make those big bets
Right.
that have defined their success.
It's a brilliant system, really.
It is.
They've created this self-reinforcing cycle where the float from their insurance business feeds their investments,
Right.
which in turn generate more capital to deploy back into insurance and other ventures.
Absolutely.
Yeah.
And it all hinges on that long-term perspective,
Right.
that willingness to play the game differently than everybody else.
And it seems like they've found the perfect person to oversee that insurance empire in Ajit Jain.
Yeah.
Someone who Buffett himself admits had no prior experience in the field.
I love that story.
Yeah, that's a great story.
It's a classic example of Buffett's unconventional, but highly effective approach to talent.
Right.
Yeah. He saw something in Jane, a potential that other people missed.
Right.
And he was willing to take a chance on him.
Right.
And that trust paid off in spades,
It did.
with Jane becoming one of the most successful insurance executives of all time.
Wow.
Yeah. And it reminds us that expertise can come from unexpected places.
Right.
And sometimes the best hires are those who don't fit the traditional mold.
It's a great reminder that success doesn't always follow a linear path.
It doesn't. It's a winding road.
Speaking of unconventional moves, let's delve into Berkshire's stake in Apple,
Okay.
which has become a significant part of their portfolio
Sure.
in recent years.
It has.
What's interesting is that they own a relatively small percentage of the company, just 5.5% by the end of 2021.
Uh-huh.
But it still translates to huge earnings for Berkshire.
It does. It highlights the power of owning even a small slice of a truly exceptional company. And it's important to note that their actual share of Apple's earnings is far greater than the dividends they receive.
Right.
Buffett points out that in 2021, while their dividends were around $785 million,
Okay.
their proportional share of Apple's earnings was a whopping $5.6 billion.
That's a massive difference.
It is.
It shows how looking beyond the headline numbers
Right.
can reveal the true value of an investment.
Exactly.
So we've got the insurance giant, the tech titan.
Yes.
What's next in this big four lineup?
Next up, we have BNSF, the railway giant,
Okay.
that forms the backbone of American commerce.
Right.
They hauled a record amount of cargo in 2021
Wow.
and brought in a cool $6 billion in earnings.
And Buffett makes a point of emphasizing that these are old-fashioned earnings,
He does.
not the kind inflated by accounting gimmicks or Wall Street hype.
Right.
He even takes a jab at the bloviated bull.
Yeah, he does.
Sorry, Scott.
He's not afraid to call out what he sees as misleading practices, even if it ruffles some feathers.
It's a reminder to always look beyond the superficial and
Yes.
focus on the real drivers of value.
Absolutely.
And finally, we have BHE, the energy behemoth.
That's right.
Under Greg Abel's leadership, they've transformed from a relatively small player in 2000 to a powerhouse in the energy sector.
Yeah.
With a strong focus on renewables and transmission.
They've done a great job.
BHE's growth is a testament to their long-term vision.
It is.
And their commitment to sustainability.
Huh?
They've been investing heavily in renewable energy sources
Yes.
and grid modernization,
Okay.
positioning themselves for a future where clean energy is paramount.
Absolutely.
It's impressive to see a company of that scale making such bold moves towards a more sustainable future.
It is. It's encouraging.
It makes you wonder if maybe Buffett's long-term thinking isn't just about financial returns, but about building a legacy that extends beyond pure profit.
That's a great question.
What do you think?
It's an interesting thought, and I think one that we'll see play out more and more as Berkshire continues to evolve.
Yeah.
But before we delve into that, I think it's time we take a closer look at how Buffett allocates capital, those big decisions that determine where Berkshire's money goes.
That's a great lead-in to the next part of our deep dive.
Okay.
We're about to step into the mind of Warren Buffett, the master allocator,
Let's do it.
and see how he decides where to deploy those billions.
Okay.
But first, let's give our listeners a moment to digest all this information.
Sounds good.
And come back ready to explore the fascinating world of Berkshire's capital allocation strategy.
All right. See you in a few.
All right, so we're back and ready to tackle this fascinating world of Berkshire Hathaway's capital allocation.
Yeah.
It's like we get to peek behind the curtain and see how Buffett decides, where to deploy those billions.
Yeah, it's really one of the most intriguing aspects of Berkshire, in my view.
Right.
You're essentially watching a master chess player thinking several moves ahead and anticipating market shifts with, remarkable foresight.
So let's break down those moves.
Okay.
Buffett outlines 3 main avenues for capital allocation in his letter.
Right.
Internal growth within Berkshire's existing businesses, acquisitions of new companies,
right,
and repurchasing Berkshire shares.
Yeah.
It's like he's got this giant toolbox,
right,
and he's choosing the right tool for the job, depending on, market conditions and the opportunities that present themselves.
That's a great analogy.
And in the current environment, it seems like buybacks are his preferred tool.
Yeah, he's been quite vocal about that.
He has.
About his belief that repurchasing Berkshire shares is a highly effective way to increase shareholder value.
Okay.
Especially when the price is below intrinsic value.
So he's essentially saying, hey, I think our stock is undervalued, so I'm going to buy more of it.
Exactly.
It sounds pretty straightforward.
Yeah.
But I imagine there's a lot of analysis and calculation that goes into that decision.
Oh, absolutely.
Yeah.
It's not just a matter of whim or gut feeling.
Right.
He's got a very rigorous process for determining intrinsic value.
Right.
Taking into account, a company's earnings power, assets, and future prospects.
Right.
And when he sees a disconnect between that intrinsic value and the market price, he's not afraid to act decisively.
It's that classic value investing approach, buy low, sell high.
Right.
But he takes it to another level.
He does?
Using Berkshire's massive financial resources to make those bets at a scale that few others can match.
That's right. And what's interesting is he's not just buying back shares for the sake of boosting the stock price.
Right.
He genuinely believes it's the best way to allocate capital.
Right.
When acquisition targets are overpriced.
Right.
Or when the market presents, few attractive opportunities for external growth.
It's like he's saying, if I can't find a good deal out there, I'll invest in what I know best.
Right.
Berkshire Hathaway itself.
Exactly.
It's a pretty confident move.
It is.
And one that speaks volumes about his faith in the company's long-term prospects.
It does. It also speaks to his commitment to shareholder value.
Right. Yeah.
He's constantly looking for ways to maximize returns.
Right.
For those who've entrusted him with their capital.
That brings to mind this section in his letter.
Yeah.
Where he expresses such deep appreciation for Berkshire's long-term shareholders.
Yeah.
He uses the word partners.
Yeah.
Which is a powerful statement.
It is.
It suggests a relationship that goes beyond mere financial transactions.
Right. It's a relationship built on trust.
Right.
Shared values and a belief in the power of compounding returns over time.
Right.
And Buffett acknowledges that Berkshire might not always deliver the highest returns in any given year.
Right.
But he believes that its long-term performance and its commitment to stability make it a compelling choice for those who share his vision.
It's almost like he's built a community of like-minded investors. People who are willing to play the long game and trust in his ability to navigate the market's inevitable ups and downs.
Absolutely. And that trust is a valuable asset in itself. It allows him to make bold moves, like the acquisition of BNSF, without facing pressure from short-term investors who might panic at the first sign of volatility.
Right. Speaking of BNSF, the story of how that acquisition came about is fascinating.
It is, isn't it?
It all started with a seemingly unrelated event.
Okay.
Buffett's decision to visit TTI, a company Berkshire had acquired a few years earlier with the Berkshire board.
Right.
It's a perfect example of how seemingly random events can converge and lead to unexpected outcomes.
True.
Buffett had never been to BNSF's headquarters, even though Berkshire owned a significant chunk of the company's stock at the time.
Okay.
So he decided to kill 2 birds with one stone and meet with Matt Rose, BNSF's CEO, while he was in Fort Worth for the TTI visit. And as luck would have it, their meeting coincided with BNSF's third-quarter earnings report.
Oh, wow.
Which sent the stock tumbling.
Oh.
The market was in a frenzy.
Right.
But Buffett saw an opportunity.
He did. He recognized that the market was undervaluing BNSF.
Right.
Just like he saw Berkshire's stock as undervalued in the current environment.
Right.
And he was ready to act decisively when that opportunity presented itself.
And that's a hallmark of his investing style.
It is?
He's patient.
Right.
But he's also decisive.
Yeah.
He's not afraid to make big bets when he sees a compelling opportunity.
That's right.
But the BNSF story goes even deeper than that.
Okay.
It's not just about seizing a market opportunity.
Right.
It's about the importance of relationships.
Yeah.
And the value of a shared vision.
Yeah.
The acquisition wouldn't have happened without that initial connection with Paul Andrews,
right.
the founder of TTI,
yes.
who chose to sell his company to Berkshire based on a shared commitment to values and long-term growth.
Exactly. It's a reminder that sometimes the best decisions aren't just about the bottom line,
right,
but about finding the right fit,
right,
and building relationships that are aligned with your core principles.
In a way, it echoes Buffett's approach to choosing investments.
I think so.
You know, he's not just looking for companies with strong financials.
Right.
He's looking for companies that share his values, companies that he believes in.
Yeah, that's a really interesting parallel.
It suggests that his investing philosophy is deeply intertwined with his personal values.
Yeah.
His belief in long-term sustainable success.
I agree.
And it makes you wonder, what would happen if we applied that same philosophy to other areas of life?
It's a great question.
Beyond just business and investing.
That's a powerful question.
You know?
And one that I think we'll explore more as we continue our deep dive.
Okay.
But before we do,
I
want to circle back to something we touched on earlier.
All right.
Buffett's emphasis on finding work that you love. Work that doesn't feel like work at all.
Right.
It's a theme that runs throughout his writings and speeches.
Yeah.
And one that I think resonates deeply with anyone who's ever felt stuck.
Right.
In a job that drains their energy and stifles their creativity.
Yeah. I'm all ears. You know, it's a topic that's close to my heart.
Yeah.
I've always been fascinated by people who seem to genuinely love what they do.
Right.
Who approach their work with a sense of passion and purpose.
And Buffett is a prime example of that. You know, he's often said that he tap dances to work every day.
Yeah.
And you can just see that enthusiasm in everything he does.
You can.
You know, he's not driven by money or status.
Right.
He's driven by a love of the game.
Right.
A desire to learn and grow.
Right.
And a deep satisfaction in creating value for others.
It's inspiring, honestly.
It is.
It makes you realize that maybe work doesn't have to be a grind.
Right.
That maybe it's possible to find a path that aligns with your passions and allows you to make a meaningful contribution to the world.
And Buffett goes beyond just saying, follow your passion.
Right.
He provides practical advice for finding work that's both fulfilling and financially rewarding.
Right.
You know, he encourages young people to pursue jobs that they would choose even if they didn't need the money.
Right.
Jobs that surround them with people they admire and respect.
He has that great analogy.
He does.
About explaining your ideas to an orangutan.
Oh, yeah. I love that one.
If you can break down a complex concept in a way that even an orangutan could understand it.
Right.
You've truly mastered the material yourself.
Absolutely. It's a fun way to illustrate the importance of clarity and simplicity in thinking and communication.
Right.
But it also speaks to the idea that teaching and learning are intertwined.
Right.
That the best way to deepen your own understanding is to share it with others.
It makes me wonder if part of his joy in running Berkshire comes from the opportunity to share his knowledge and insights.
I think so.
With shareholders, with the wider investment community, and with anyone who's willing to listen and learn.
And he seems to genuinely enjoy the process of teaching.
He does.
Of breaking down complex ideas and making them accessible to others.
It's a fascinating aspect of his personality.
It is.
And one that I think sets him apart from many other successful investors.
I agree.
He's not just about making money.
Right.
He's about sharing the knowledge and the wisdom he's accumulated along the way.
It's a legacy that extends far beyond the billions of dollars he's amassed.
Right.
It's a legacy of insight, of generosity.
Right.
And of a genuine belief in the power of education to empower others.
And it ties back to his emphasis on long-term thinking.
It does.
He's not just building a company.
Right.
He's building a culture of learning.
Yeah.
Of sharing.
Yeah.
And of creating value that extends far beyond the next quarterly report.
It's a powerful vision.
It is.
And one that I think we can all learn from.
We can.
Whether we're running businesses, managing investments, or simply trying to live more fulfilling lives.
Absolutely. And I think it's a great place to pause and reflect on what we've covered so far.
Right.
We've explored Berkshire's unique approach to capital allocation.
Yes.
Buffett's long-term vision. His commitment to shareholder value.
Right.
And his belief in the power of finding work that you love.
Yeah.
We've even touched on the serendipitous story of the BNSF acquisition.
We have.
A reminder that sometimes the best opportunities come when you least expect them.
They do.
It's been a whirlwind tour of Buffett's world.
It has.
And I feel like we've just scratched the surface.
Yeah, we have.
But before we dive into the final part of our exploration, let's give our listeners a moment to digest all this information.
Sounds good.
And come back ready to connect these insights to the bigger picture of navigating today's economic landscape and applying Buffett's wisdom to our own lives.
Looking forward to it.
We've covered a lot of ground in our deep dive, into Warren Buffett and Berkshire Hathaway.
Yeah.
From their surprising infrastructure holdings to their unique approach to insurance and capital allocation. It's been quite a journey.
It has been.
But you didn't come to us just for the fascinating facts.
That's right.
Right? There's more to it.
You wanted to extract some wisdom.
Yeah.
Some actionable insights.
Yeah. How can we use this?
That you can apply to your own life and investments.
Absolutely. I think that's what everybody wants to know, right?
That's the million-dollar question, isn't it?
It is.
We're not all running multi-billion-dollar conglomerates or picking stocks with Buffett's track record.
Right.
But I think there are some core principles that we can all embrace.
I agree.
Regardless of, our financial situation. Or investment experience.
Yeah. And perhaps the most fundamental principle,
the
one that kind of underpins everything Buffett does, is that long-term perspective. He's not chasing quick profits or reacting to every market fluctuation.
He's playing the long game. He's building value over decades, not days.
It's about resisting that urge to jump on the bandwagon, to buy into the latest hype. Or panic sell when the market takes a dip.
Exactly. It's about having that conviction to stick to your strategy. Even when everyone else is zigging while you're zagging. It's about understanding that true value takes time to mature. Like a fine wine.
It does.
Or a well-tended garden.
And that long-term perspective applies not just to investing.
It does.
But to so many other aspects of life.
Right.
Building a career, nurturing relationships. Even pursuing personal growth.
Absolutely.
It's about recognizing that real success is a marathon, not a sprint.
It is. It's a mindset shift, really.
It is.
It's about moving away from that instant gratification mentality. That kind of permeates our culture. And embracing the idea that the most meaningful things in life often take time and patience to develop.
And speaking of patience, Buffett's approach to investing is a masterclass in the power of waiting for the right opportunity.
It is.
He's not afraid to sit on the sidelines, holding on to cash, until he finds an investment that meets his criteria.
That's right. He's like a predator patiently stalking his prey.
He is.
Waiting for that perfect moment to strike.
Yeah.
He understands that the best deals often come to those who are prepared to wait, to be disciplined, and to resist the temptation to chase every shiny object that catches their eye.
But waiting doesn't mean being passive.
No, it doesn't.
It's about being prepared.
Yes.
Doing your research.
Right.
And developing a deep understanding of the businesses you're considering investing in.
Absolutely. Buffett's a voracious reader.
He is.
Constantly absorbing information.
Right.
And honing his analytical skills.
He doesn't just rely on analyst reports or market trends.
No, he does.
He digs deep, understanding a company's its competitive landscape, and its long-term prospects.
It's about being able to say,
I
understand this business. I believe in its future. And I'm willing to bet on its success.
And that conviction comes from knowledge, from doing your homework, and from developing a sense of what Buffett calls intrinsic value.
That's right.
It's not about what the market says a company is worth at any given moment. It's about what you believe it's truly worth.
Yes.
Based on your own analysis and assessment.
It's like having this internal compass.
Yes.
That guides your investment decisions.
Right.
Helping you navigate the turbulent waters of the market with a sense of clarity and purpose.
And that compass is calibrated by your own values, your own risk tolerance.
It is.
And your own long-term goals.
It's about aligning your investments with your beliefs. With your vision of the future. And with the kind of world you want to create.
So it's not just about making money.
No, it's not.
It's about making money in a way that feels good, that aligns with your sense of purpose. It's about investing in companies that you believe in.
Yes.
Companies that are making a positive impact on the world.
And that brings us back to the idea that Buffett's investment philosophy is deeply intertwined with his personal values.
It is.
He's not just a brilliant investor.
Right.
He's someone who genuinely cares about the long-term well-being of the companies he invests in, the people who work for those companies, and the communities they serve.
It's about building a legacy that extends beyond pure financial gain.
Yes.
A legacy that reflects your values and contributes to something larger than yourself.
And I think that's a powerful lesson that we can all take to heart.
I agree.
Whether we're seasoned investors, aspiring entrepreneurs, or simply individuals navigating the complexities of life.
Right.
It's a reminder that we have the power to choose where we put our money, our energy, and our attention.
Right.
And by making those choices consciously with a long-term perspective and a commitment to our values, we can create a world that is more prosperous, more sustainable, and more fulfilling for all.
Beautifully said.
Thank you.
It feels like we've come full circle.
Yeah, we have.
Connecting those seemingly disparate pieces of information into a cohesive whole.
It's all connected.
It is.
It's been a pleasure exploring these ideas with you.
It has.
I hope our listeners have found this deep dive into the world of Warren Buffett and Berkshire Hathaway.
I'm sure they have.
As insightful and thought-provoking as I have.
It's been an incredible journey.
It has.
And I think we've all gained some valuable wisdom along the way.
I agree with you.
So until next time, keep learning, keep exploring, and keep diving deep into the things that matter most to you.
Absolutely. Couldn't have said it better myself.